I have a lot of questions on, first off, what's the difference between mortgage life insurance and regular life insurance? This comes up a lot, and I want to get your thoughts on it and your expertise on it.
Absolutely. Absolutely. Okay. So your mortgage protection plans and your life insurance they're both life insurance policies. Okay. But your life insurance traditionally will give you one major benefit, being a death benefit. Something happens, someone passes away, then the beneficiary receives money. And that's pretty much what it's designed to do. Okay. Now, your mortgage plans, it's going to give you that same death benefit, but then it's going to give you some benefit in your living years. Okay. And you'll hear people use the buzzword living benefit, or accelerated death benefit is another term for it. And what that means is that if you ever had a terminal illness, an example everybody can connect to is cancer, a critical injury, say, for instance, a major motor vehicle accident, you got major brain trauma, and you're pretty much a train wreck and laid up for a really long time. Critical injury or a critical illness, heart attack, stroke. People can identify with those. And there's many other diseases out there that fit in those categories, but basically terminal illness, critical injury. Okay. You're able to take money from your mortgage plan to help you so that you can be paying mortgage. You can be paying insurances, things that you need to pay so that you can stay above board and you don't lose your home. You stay in a comfortable financial place while you're trying to focus on getting better and getting back to what you used to be able to do.
So you could take out some of the money, but not you don't have to use the full plan. You could take out what you need. Is that correct?
Correct. You're allowed to take out a certain percentage, say up to 80%. You could decide to take 20. You could decide to take 40. Okay.
How can you put that money back in if you don't use it?
You can. I'll actually just say that it's just always best to take what it is you feel that you need. Okay. Instead of taking too much, because you want to leave that in there for a death benefit should something happen out in the future. But it's a nice safety net to be there for you.
So a lot of our clients end up getting the little pink letters in the mail after they close, and they try to play tricks on getting people to fill it out and send it in, and some people are like, oh no, I sent this in, what's this about? Or they send me a picture of it. It's like, hey, is this from you? And so do you know, the reason why I bring that up is I want to be able to talk to people about the insurance piece just enough to help them in the right direction. I get one of the concerns is I just bought a house. How can I also afford life insurance? And I think you answered the mortgage life insurance has some other options than the regular life insurance may not give you some of these outs. And again, you need to talk to somebody. Cynthia, you're a great insurance professional, and I think you need to talk to a professional on this. But when they get these letters and they ask, how do they afford something that they already just bought a house? Now that they afford this big policy too, what's a good way, and any tips on affording the policies or any structuring there?
Okay. All right. So let's say somebody went out and they just took a $500,000 mortgage. Okay. Now, if they want to go out and get a plan to cover that $500,000, obviously they're going to have to pay a month-to-month premium for that. But maybe it's not the right time for them to be able to do that because they're a brand new homeowner and they've got a large mortgage, and they've got some cost of getting into the house and things are happening. Okay. It's probably best at that point to take a very small policy, a policy that would give them enough money that if someone were to pass away, say, for instance, a husband and a wife, and the husband were to pass away, particularly if the husband's a sole income earner, they would give them enough money to be able to pay for a period of time, pay for a year, 2 years of that mortgage. so that they can at least keep things in place while they're trying to figure out what their finances are and what they need to do. And then they can move forward from there.
Yeah, I think that's a huge tip, because a lot of people just may push it off. And then the last thing they want to do is get a call if one of the spouses have died, and then they have to sell the house, or they can't afford it, or God forbid they have a foreclosure situation. And right now, as things getting tighter with inflation and other costs going up, and now with interest rates going up, it definitely is a concern. If there's a blip in something, then that can cause a problem. But getting that cash inflow of at least a chunk of the money for the mortgage, you don't have to pay it off. You just have to make the payments and maybe pay a few other things. I think that's a huge tip. And I think that's my mind automatically goes to having to pay for the whole thing. But I love the idea of, wait, we don't need to pay for the whole thing off. You just need to be able to make the payments. You need to be able to service the debt. Just like when you buy the house, you're buying a $500,000 house. You don't need $500,000 in cash. You need to be able to make sure you can service the debt. And that's a huge tip. I love that. I definitely am going to share that with the clients I work with. And I think that's awesome. Thank you so much for sharing that.
Yeah. Always better to have something than to have nothing at all. You don't want to ever be in the place where, oh my goodness, something happened and now you're scrambling.
Yeah. Well, that's awesome. So thanks for joining me. I just wanted to make Cynthia and I were just having a conversation around this for other clients we have, and I just wanted to shoot a quick video and capture this, because I think this is a great topic. If you want to learn more about it, go ahead and give them your information on this video, just so then we can share that with whoever's watching.
Sure. So my name is Cynthia Parke, Parke, and I am a licensed agent and a broker. And my phone number, to make it short and sweet and easy, is 760-521-7696.
Awesome. I really appreciate your help. So thank you so much for joining me. And then we'll edit it there. So I have a videographer that I'll just edit that piece, and we'll keep it short, but love it. I'm trying to do more of this, because it's like, you go back and having to schedule something. It's like, well, why not we're talking about it right now. Let's just do it,
Yeah.
And
that was
then
a good idea.
You're just done. So I love it.
You want my signature now, because I'm going to be famous? Just kidding.
Maybe we'll see. Little wins, little wins, and little things to share with people, because that's what we need to do. We need to give value. I mean, we can sit here and talk about it, but let's give it to them, and let's give them some tips, and we'll edit this and we'll send it out. I'll send it out to my database as well. I think it's very worthwhile.
Yeah, it's definitely worthwhile. And the only other thing I'll tell you, Kevin, and then I got to run.
Yeah.
Because I'm a nurse, okay, I'm so different than a traditional life insurance agent, because I can sit down with people and I can take a look at where they are in terms of their health conditions. And, I can say to them, okay, you've got some diabetes right now, and some of the medications you're on them because you've got some kidney stuff going on with that diabetes. Okay. And this is what it's going to look like for you out in the future. This is how this disease progresses, and this is what happens out in the future. Okay. And that really helps people make decisions in terms of taking care of what they should take care of now, instead of getting out there and being in a, really bad medical place and like, oh my goodness, I wish I would have back then. Okay.
Well, I think that's an interesting point, because when you talk about life insurance, it makes you kind of think about stuff you don't really want to think about, but it's also kind of good, because it makes you go there and kind of, okay, well, maybe I do need to take better care of myself. Maybe I do need to do this. It's like something good to address. I think that's a good point.
For the clients that you see, when you talk about the income differences, for the clients that, they've got a fair amount of money, and they can take money and go and invest it and churn money and make money and do whatever. Go do that. Yeah. Game on. But there's a very large percentage of our population that is not in that bracket at all, and never will be.
Yeah.
And life insurance can change things up dramatically for them.